Morning to all traders and welcome to another Markets on Waves Tuesday today, the 22nd of June, and we are here again with yet another Elliott Wave update. And we're going to have a look on the index, euro, dollar, pound, dollar, the US oil and gold, because we need to keep a close eye, especially now since we've seen this recent move to the upside on the DXY, and everybody thinks, well, is this a reversal? I personally don't think so. But obviously my scenario for the downside is invalidated. We did talk about the invalidation down here. It's now happened, okay, which means we'll go for an alternative scenario. Now I'm looking at this wave 4 as an A, B and C, which is a flat pattern. So truth is that well, because wave B is done below the 90%, right, of A, and wave C can actually end anywhere above the 23.6 now, okay? So I am expecting indeed, and also to respect the guidelines for this, or the rules maybe, for wave C. We've got 1 and 2, we've got 3 and 4, I'm expecting 5. Wave 5 is going to break the 92.44, should it come in, of course, and that is because it has to respect that guideline as well. Now, how high is it going to go? We do not know, but we can literally get to the previous high of 93.43.6, let's say, even a slightly bit below the wave A, and still that is considered a flat, guys. Now if we break higher above, then we're obviously going to change this into a W, X and Y. It's likely to be a case where that's ABC, then we're going to get an ABC or something like that, okay? The alternative scenario, as well as we've kept that alternative scenario for a while now, is that wave 5 is done down here, and this is leading diagonal 1 and correction in 2, and then we'll go all the way up to 3. But you know, correction in wave 2, 90% for a reversal, I'm not sure that's what I would follow. Either way, short term, we could see this becoming 1, 2, 3, 4, 5, ABC 1, 2, 3, 4, 5, okay, and then continue higher. Or it could be a case where we ended down here and we're going to continue higher up. Do we get any signals on the RSI and the MACD? The RSI and the MACD show no signals. So this means that perhaps we could start moving higher without a fresh low from here. So we'll be really pay attention to what's going on over here. Plus, since we've done 1, 2, and 3, I'm not sure why TradingView behaves that way, but we need to draw these levels over here. So you can see for now that we didn't even do the 23.6. So we might get there and then even down to 38.2. What else we can do is, since we've got 1 and 2 over here, look at this. Wave 2 did like anywhere between the 23 and 32. So it's very likely that, according to the guidelines, of course, that might get us down to the 61 of 3, okay? The 61 of 3 would be around the 91 or so. So pay attention in the short term what's going on in wave 4, so that we can have an idea about where 5 is going to end. Euro USD, nothing changed from the last time. We looked at this as a leading diagonal, okay? That's my wave 1, W, X, and Y. We are still expecting 1, 2, 3, 4, another leg down, okay? Perhaps the 78.6 Fibonacci retracement, as I have called the last time as well, around 118.21. Now, if prices break that level, yeah, then I'm gonna, obviously the probabilities of that, you know, being invalid will increase, but not as much if we stay above the 1776, okay? Perhaps even maybe the 1788. But the more we get closer to this level, the more chances of invalidation there are, which means wave 2, similar to the DXY, is going to be here. This is ABC, ABC, and that's going to be a leading diagonal 1, 2, then 3, 4, and 5. Perhaps for A, then we're going to get B and C, or that's going to be ABC for WX, and we're going to get the Y down below that previous low, where primary wave 2 is likely to end, and then of course we continue higher up, okay? So that's the alternative as well over here. The RSI and the MACD, don't really see much, not on the one side, not on the other. Perhaps a slight hidden bearish divergence here on the histogram on the MACD. Now on the pound had a very good bounce here, but do not forget that we talked about this 1, 2, 3, 4, 5, and we were expecting wave 3 to go lower, and we expect this wave to go to at least 138.03, okay, because we are expecting a flat pattern over here because of this very slight move up above wave 3. Now what we're looking at, guys, over here is that for a correction in wave 4, we're looking at this to end. It could be A, B, and C, or it could be a case where this is A, B, C, it ended already and we're gonna start moving lower down. But what we need to do again, as with the previous counts, we need to measure 1 all the way 1 down to 3. We did about the 85 or something, and then here it should be respected. So let me just take these levels out. Not like this. Let me just take this off because they seem to be a bit hard on the eye. Now let's check this one, wave 1. We did 61 exactly, and then we need to check wave 3, and we want to go to the 38.2. And we pretty much did that as well. So from that perspective, wave 4 could be finished, but it's very likely that we're going to see something like this, okay? Maybe even deeper, we don't know. Might turn into a triangle, we don't know. But I think we're gonna stay in this area for a bit longer, not just go straight down from here, okay? But I am indeed expecting another wave down, and from there I'll be looking for price to start moving up again once this running flat scenario is going to complete. This is what I'm looking for, running flat. Do not forget, of course, that wave 4 could have finished down here. This could be like 1, 2, 3, 4, and 5. That is my wave 2, okay? And then we could continue higher, and that is could end like an ending diagonal, obviously, because 1 and 4 here there is an overlap. As this is going to be a wave 5 as well for an ending diagonal, that would make a very good sense. Okay, don't forget also that could be 4 and 5 over here, 1, 2, 3, 4, 5, and this is like 1, 2, 3, 4, 5, not for 4, for 1 of a correction to the downside. Okay, or A to the downside. So these are the two scenarios I'm looking. So ending diagonal, yeah, or the alternative scenarios, or a reversal to the downside. Okay, let's have a quick look on the RSI MACD. RSI shows us a signal here. That means more downside. MACD more downside. Actually, it's quite bearish compared to euro dollar as well, right? So let's just quickly go on oil. Oil has been very challenging, guys. It's like you know, all the signs suddenly disappear out of one piece of news, which is expected to be the case. Of course, you know, we need to look at not just macros and the TA, but also, you know, this event in the Mexican Gulf that is, of course, pushing the prices up. Now, the main is not changed, but there is a variation over here. As you can see, my 1 and my 2, my 3, my 4, and now that looks like it's a 5 perhaps. This overlap, I'm not sure it's really valid because we're also in commodities, so it could be seen. So, and in diagonal, or 1, 2, 3, 4, 5, it's very on the 50-50 for me. Now, as you can see, I moved my wave 3 and 4, okay? This is my 1, 2, my 3, 4, and my 5 over here. It's an impulse, an ABC for wave 4. And now we are looking at this particular structure over here to get more, a better idea of what we can expect. Now, the 4 and the 2 look pretty similar in terms of time. One is more shallow than the other one is more deep, which is okay for the rule of alternation. What we can do is check that wave 2 over here is 23.6. Yeah, and over here, you know, should really get down to, well, quite deeper, right? So if we take the 161 extension as the guideline where wave 3 ends, right? It could be a case, guys, where my wave 3 is going to be here, right? Obviously, we need to relook at this structure, and then wave 4 is going to have a deep correction. That's going to get us down to, well, around the 67 or so, because we'll have to take 2 and 3 and look at the 61 at least, which is 78, sorry. Which is going to bring us around the 67, as I said before, just for the equality of waves 2 and 4 actually to complete the 100 Fibonacci retracement when you add them up. So it could be a case, it's not unlikely. But the question here now is how we're going to continue, and for now, I don't really see signals that tell me that we're going to go lower or we're going to go higher. Obviously, we have a very big signal here for a bearish move to the downside, and that might just be a false break, okay? Which means indeed, that might be wave 5 over here, okay? And we are done. Or we might see this turning into, might be 1, 2, 3, 4, and 5, which means we can expect prices to move a little bit higher, up to perhaps, well, if we assume wave 1 is in, we can go to the minus 618. 1 second, 618. 76 or so for wave 3 at least, and then from there probably up to 77 or 44 or so. That would be a very reasonable projection as well. But guys, I'll be honest, I will be not really looking at the oil at the moment. It's getting a bit of a mixed up. The signals are mixed up. There's been signals to the downside and prices moved up. There has been signals to the upside and prices moved down. So it's better to stay safe sometimes rather than being sorry. Either case, the running flat scenario for me is what it really is in. And now, we either ended here wave 5 and we're going to correct. We ended wave 3 and we're going to correct in 4 instead of 2. Or we're going to continue a little bit higher to finish 1, then go down in 2, okay? And then 3, 4, and 5. Unless, if this is moved to the upside in wave 5 here, means that this is the primary wave 1, which means we're going to get a much bigger correction down in primary wave 2, okay? So all the scenarios included here. Obviously, price is what is going to tell us, to give us the best indications. And now for gold, okay, I still remain that, in the scenario that this is a correction in wave 4. I don't want to go below 1756. The moment we cross that, then this becomes invalid, okay? Because of course that's the top of wave 1. So I'll be looking at a different structure over here, which I don't think there is any point. Maybe we'll have a look at what this is. But for now, here's what I'm looking. 1 A, B, and we've got 1, 2, 3, 4, 4, 5, 6. So which means you've got the 1 and the 2. Then internally we've got 1, 2, 3, 4, 5, and that's my 3, that's my 4, and that's my 5. Or we might get that 4 coming in and another move to the downside 2. Anywhere between the previous low, but above 1756, and then continue higher. Now, what I'm looking is the re-entry of gold prices within this channel and the rejection, okay, over here. So that, due to its structure, could be only a leading diagonal because the waves overlap between one another, okay? If it's not a leading diagonal, we're going to get like 2 and 3 move up. If it's not leading diagonal, most probably could be a case where ABC, and end in diagonal for a flat pattern or so. Then we're going to get the 5th and then move up. Or it could be a case, guys, well, this is just a simple correction over here. And we're going to continue down in 5, perhaps even break it for an invalidation. Now, if we get an invalidation, just to remind you all, then most likely this is going to, we'll have to really look at the structures over here and extend wave Z to complete triple zigzag at lower prices, okay? Because the break of 1755 would reopen the space, the room down to 1675 and perhaps even lower, okay, guys? Now, do we see anything on the MACD on the RSI? MACD RSI, not really yet. So we might get prices moving a little bit up, okay? Imagine getting something like this. That is going to be a much better bearish signal, right? But for now, we don't get anything, which means continuation most likely to the upside. Okay, guys, so this will be all for the day. Thank you very much for joining for another day, and I hope you enjoyed the video. If you did, leave your comments. If you have any analysis or a different thought about the analysis, leave your comment, and I will get back to you as soon as I can. Thanks for watching again, and enjoy the rest of the trading week.